All right, we're back for another episode of the Crypto Mavericks podcast. You know my great co-host Joe, and we have a great guest here for you today. It's Doug, who's the founding contributor of Fogo. And you know what, everyone? They're the fastest layer one blockchain out there in the streets. Really excited to talk about what they've built, what they're building, some future projects. Doug, really excited to have you on the podcast today.
Great. Well, I'm really excited to be here. Thanks, Brian. Thanks, Joe. Yeah, really excited to jump in and take it from here.
All right, let's jump in and let's talk a little bit about your background. How'd you get into the world of Web3?
Yeah, so I spent most of my career as in TradFi as a high frequency trading quant. So I was at a firm, Citadel. Probably a lot of people, they weren't as known back then, but now pretty well known. This was right when they were kind of spinning up their high frequency trading operations about a bajillion years ago. So I started there, learned a lot. Went to a number of other smaller teams in different TradFi markets, in the US and various smaller markets around the world. At one point, kind of randomly, I was the largest liquidity provider, me and a very small team, largest liquidity provider in Turkish equities. It's kind of a small niche market. I wish I would have did crypto. This was about 2016, so I wish I would have just jumped into crypto then. But yeah, did that for a while. And then around DeFi summer, got interested in MEV actually. So read some articles about MEV and kind of all this like cool stuff that was happening and DeFi in general. And obviously this was when things were blowing up. Everyone was locked down. So, had some extra time. We're going out it wasn't going out or anything. So, yeah, I decided to kind of, let me build a, MEV bot kind of as a hobby. Always wanted to learn more about crypto and Ethereum, kind of knew it on a high level, but when you get your hands dirty, you learn a lot more. Did that as kind of a side project, that quickly took off. That was really cool, kind of seeing something take off so easily, just kind of like when markets are new and immature, there's always a lot of opportunity. And so it just kind of became justified for me to spend full time on it. So shifted into that full time. So it was a MEV searcher, MEV searcher for a little bit. And then in 2021, I kind of had a lot of ideas. Okay, was trading on all these dexes, had ideas about, okay, I think this is how things could be improved. Started my first project, Ambient, which was originally, we still have these operations, EVM based AMM spot DEX. That was pretty, that was pretty interesting. We did a lot of stuff that was like kind of Uni v4 before Uni v4 was out there, particularly around like hooks and like trying to like price liquidity accurately and fix some of the economics and AMMs. Did that for a while. And then around last year, for a number of reasons, we had always kind of wanted to do perps. Was kind of interested in like the perp space. I think, anyone would tell you that for a DEX, perps are a lot better of a business model than spot trading, if not just because someone shows up with $1,000 and you have 100x leverage, they can trade 100 times more and therefore, generate as 100 times as much volume and fees. So we always want to do perps and obviously, some of the shifting like stuff with the administration, the regulatory stuff, we were a lot more comfortable doing it. So we were looking around from the ambient side. Okay, like where can we build kind of. We wanted to really build something on chain. I think a lot of perps dexes are, either semi on chain, semi decentralized. We really wanted to be fully on chain, have everything on chain. And, number one, like you needed something like Solana scalability plus more and like really low latency. So we were looking around like, okay, what chain meets like these criteria? And at the same time, that's kind of when I met Rob and Mike Cahill from Pith, and they had been kind of Rob, who originally had the Fogo idea, and Mike Cahill from Pith, who kind of got brought in to help build it. And they had this idea of, okay, what if we build like a blockchain designed, like a general purpose chain, but designed from trading from the ground up. So I think you have a lot of chains that are like app chains that are designed for trading, like obviously Hyperliquid's very successful, Hypercore, and that's really designed for trading, but it's not a general purpose chain, right? Like it's an app chain. So what if you could build a general purpose chain? I think like you have to do something like SVM for that, and really orient it towards trading and kind of build from first principles. And that's kind of where the idea from Fogo came around. So like we started, okay, this is the latency numbers we need. This is kind of the consistency we need, right? Like you can't be dropping packets when like Fed announces numbers. So, right, this is kind of the throughput we need, and we kind of have been doing Fogo since then. So, yeah, that's how I got to here.
Yeah, perps trading has been quite the area of interest recently with like the asters and hyperliquids and the flywheel effect there. And I've never gone too far down the rabbit hole of perps trading because I'm so scared of getting liquidated. But man, just like a little taste of it, and it can be a lot of fun.
Yeah, I think it's really there are a number of cool things about it compared to spot. The first is you don't have to have the asset
Yeah.
there. You just have to have the oracle, right? So like, we had really, Ethereum shifted into this L2 focused roadmap. We were doing the spot deck stuff, and the EF was telling everyone, don't build on mainnet, build on like L2s, and like that's challenging because you have to pick the right L2 ahead of time. So like have a number of issues with the roadmap thing, but like the problem is you pick an L2, a lot of times the assets that people want to trade aren't there, right? You go to Hyperliquid, you can trade, Bitcoin, you can trade Solana, you can trade every coin under the sun. So I think that's definitely you really bring in like a trading focused mentality in a way with perp dexes that you just don't get with spot dexes, just because moving assets around between chains is tough.
Yeah, really well said. How's Foga differentiate itself from risk management protocols in the crypto ecosystem?
Yeah, so we've worked like pretty have thought pretty deeply about this. So in terms of the chain itself, like we've taken a lot of number one, like the chain itself is built like on top of Solana, and like we have made adjustments to make it faster, and a few other things to make it more friendly. But like we've taken a really surgical approach to like what we're changing about Solana, and the reason being, right, Solana is like super battle tested. And like, we kind of benefit from that battle test, and we know, okay, this software is, it's been through the ringer. So on the chain level itself, on the perp stack side, like with ambient, like what we've really focused on is number one, like being really precise about like the oracle and the data that you bring in. A lot of times where things get tripped up is like the oracle itself like gets manipulated. Sometimes the liquidity is out of whack, and this is where like working with Pith is really useful, and like Pith is very close partner of Fogo, and everything's based off Pith oracles, and the latency. Pith is able to bring what they call Pith laser, which is super low latency oracles. You're able to kind of get very accurate pricing, kind of 24/7, and it's been super useful. And then the third thing is just like you have to really think carefully about, especially if once you start going out on the tail of shit coins, you want to think really carefully about like, okay, what do my what does my what is my risk management, like how much leverage am I giving people, what is my what is my worst case scenario, how do I handle that? Like obviously you don't want to have to handle that, but like, okay, how much does the insurance fund need? What about like auto deleveraging? There's kind of all these mechanisms that have been tried in the perp space, and kind of people figured it out. But the big thing is, right, like you have to get those parameters right, and that's where it helps. Like the team itself is pure trading background. So I'm from Citadel. A lot of the team is former Jump, and a lot of the other teams different TradFi banks. So like we've kind of live and breathe and eat. Like we've seen like all kinds of kind of we've been through the ringer. We have the scars kind of to know where to get tripped up at.
Not a perps question, but I like these fun questions I asked founders like yourself. Where did you guys come up with the name Fogo? Because immediately when I thought Fogo, I thought of Fogo de Chao. Brian, have you ever had Fogo de Chao?
Yeah, I've had the meat sweats, not gonna lie. We were just where were we? In San Diego, and you, me, and TiVo.
Yeah.
At least TiVo and I was
We were
like,
just talking about it.
we need to go get some Fogo.
Yeah. Yeah. Is there a Portuguese relationship there? Tell us.
Yeah, there is. So a lot of the team is either Portuguese, or they live in Portugal now, or different. So the team has pretty deep. I myself don't have any connections to Brazil, but the team has a lot of connections to Brazil and Portugal. Most of the Pith team is actually in Portugal. to a lot of the teams, the Fogo teams in Brazil. So we have a lot of Portuguese connections, and Fogo obviously is the Portuguese word for fire. And I guess one thing about the chain is it's always been this Firedancer first idea. And for people who don't know, this goes to Solana, where there are kind of these two competing clients right now. One is Agave, which is like the classical Solana Solana client. The other is Firedancer, which is kind of built from the ground up by Jump, actually, bringing in a lot of like HFT knowledge of like how to make things super fast. And so kind of one problem with that is when you run two clients in the same network, you can really only be as fast as the slowest client otherwise, right? Like it falls behind, and then so it's nice to have client diversity for other reasons, but we kind of made a conscious decision going into it is we're going to pick one client, really focus on the fastest performance, push this thing out, and that's Firedancer, and hence the name Fogo. But yeah, it's kind of a fun name to say, and I love FogoChain, so it's not bad. It's every time we do a dinner with somebody, we always end up at FogoChain now, because I think everybody just wants to eat it when they say the name.
Okay, I do have a question now, a real question. I'm not like Fogo wasn't. Can you dispel or maybe just talk about the uptime? A lot of people voice concern about Solana overall, right? And even though you guys aren't exactly that, and how that's been throughout the years.
Yeah. I mean, look, like obviously Solana has cut its teeth throughout the years with uptime, and the Solana protocol is very, very complex. And I think right, like I think there's been a lot of lessons learned. It's been a while since Solana. I want to say over a year since there's actually been any downtime. So like if you look at a chart over the years, the downtime is going lower and lower. I think, right, like that is one trade-off you make. Well, like Ethereum really prioritizes uptime, but the trade-off there is it's not scalable. So this kind of goes back to the classic CT debate. Okay, if it costs $100 a transaction, is that effectively downtime because 99% of your users won't be able to transact? That being said, like I think the engineering is kind of getting all. I mean, the engineering is always good, but right, you learn lessons over time. Things get kind of more battle hardened. Luckily from us as Fogo, we kind of get to benefit from like what now 5 years of over 5 years of Solana mainnet. So yeah, it's it's a good question. Like everything in crypto, there are certainly trade-offs.
Tell us a little bit about the business model, the revenue model. I know that's been kind of the chatter of the town in a lot of different protocols. So we'd love to know kind of what your thoughts are there.
Yeah. So I mean, we've thought about revenue for a long time, and have been pretty thoughtful about that. And it's interesting now, kind of seeing the market validate the importance of revenue. But I guess it's kind of absurd to think, okay, businesses have to make money, but but yeah, I guess now it's finally people are saying it. So. One thing, right? Like the business of any chain, any L1 is like they're in the business of selling block space. So like one way or another, or I mean, I guess the one exception to that is Bitcoin, right? Which is in the business of selling money. But absent if we're going to be the global monetary standard, which hopefully down the line, central banks are buying Fogo, but probably next year, not next year. So right, like you're really in the business of selling block space. And so one way or another, right? Like how do you monetize that? So there's the classic way, like the way like Solana makes money now is that when there is state contention, they're able to increase priority fees, and people pay more obviously to access parts of the chain during or parts of the state space where things are really interesting, markets are really volatile, kind of all that stuff. And if you look, it's right. Maybe 2% of Solana transactions pay, I don't know, over 50% of the fees, right? Like it's very like obviously markets kind of drive fee models. So I think like this goes back to the chain has prioritized trading, and I think by far trading is the most profitable activity for L1s, not to knock like gaming or stable coins or all that other stuff. But a lot of times those are kind of loss leaders for having trading activity, which drives that. The other thing that we're trying to kind of take a different approach here, let me think like how to explain it, is I think every chain, or at least like every major chain, has kind of taken this idea of block space is just auctioned off every single block, and it's like a free for all, which is great. That like gets you very high returns when things are very congested. The problem with that is that there are just certain applications that doesn't work for, right? And there's a reason like Hyperliquid is on its own chain instead of being like on top of Solana. And a big reason because of that is like when you run a perps dex, you kind of need access to trade all the time. Not even just trading, but like I need to push Oracle updates. I need to liquidate people. I need to, adjust collateral. Like you can't just be congested off the network because, there's a big airdrop claim or something. And so, right, like we've also taken kind of this approach of working closely with like our top apps to figure out a way to, okay, can you allocate a certain amount of block space? And the apps, the apps share the upside of, that enables a certain class of apps, and like those apps have revenue, and those apps share revenue with the chain. So and ultimately that can be more profitable for both because you're not always being super mercenary about block space on every block. But the flip side of that is like you have a much more predictable revenue stream because apps tend to have predictable revenue streams. So, this is something, obviously kind of sitting on both sides of this, but this is something like Ambient as the perp dex is trying to pioneer with Fogo is like, can we allocate, like make sure the perps dex always has access to a certain amount of block space if needed. And in turn, right, like a certain amount of the revenue generated by the perps dex, which can be quite a bit for perps dex, goes towards buying Fogo, and obviously that benefits the token. So kind of the analogy I use is right, like being able to like buy a hotel room is great, but some people need a 12-month lease, and like it would be like terrible if like all of a sudden you were kicked out of your apartment because there's a football game in town and somebody has outbids you for the night, right? Like people need kind of that certainty and to be able to plan.
Yeah, it reminds me of the CryptoKitties days when people were trying to, conduct normal business on Ethereum and then finds out an NFT dropped that froze the entire chain. Is that the right time?
That is an OG reference. That is very, very similar type thing, right? Like I think that's been right for general purpose chains. Like it is sometimes just a crazy thing you don't know about can kind of impact you. So
I don't want to get too off subject, but the CryptoKitties things, Joe or Doug, curious, do you guys still have any CryptoKitties, or did you ever have them?
I remember following along, but no, I never acquired a kitty. I wonder what the floor price is now.
Full disclosure, I do still have a virgin CryptoKitty that I never moved from my wallet. I'm not even exactly sure what that means at this point, but at the time it felt like an unbelievable buy. Jumping back a little bit more, I had some notes here. Where did it go? Oh yeah, jumping back a little bit more to like these liquidations and these perps decks, and I have a note here how there was a 1.8 billion in liquidations, and I believe you said this. It's not a market crash, but it's really just over levered traders getting flushed. Can you kind of just like educate the audience? Because when we see these mass liquidations, it's scary, and we had some couple days ago or a week ago, and now we're absolutely ripping. Curious about your thoughts there.
Yeah, I mean, I think in trading, we kind of always think of what's the difference between toxic flow and non-toxic flow, or right, smart flow and dumb flow, or sharp flow and dumb flow. Depending, everyone maybe has like a different name for it, but right, like the core idea is there are people who are trading because they're smart, and you don't want to be on the wrong side of them. You don't want to be on the opposite side of them. And there are a lot of people who trade either because they're overconfident, they think they're skilled when they're not, or a lot of times they're just like forced to trade, right? It's just mechanical. And classic example of that is if you're levered 100x on a perp and it goes down 1%, you're forced to sell. So right, like liquidations are often not really, almost never a sign of like, okay, there's something wrong with the asset. And in crypto, that's kind of like, what does that mean, right? These assets are reflexive. But like, if you think of, a stock or whatever being being liquidated, or even back to like the 2008 housing crash, right? Like that was in some sense a liquidation. People couldn't pay their mortgage, banks foreclosed, right? That's like a liquidation. You have forced sales. Those will push like prices temporarily, because the other thing about it is if it's mechanical, right? Like you have to take whatever price you can get. You have no option. But the flip side of that is like those are usually the best time for someone who's patient and does have good risk management to sit on the opposite side, because there's nothing fundamentally different about Bitcoin now versus 30 minutes ago before it got liquidated. So like it's a risk, right? It could still keep going down for other reasons, but if you're patient and sit on the other side, usually betting against liquidations are can be pretty smart. So I think definitely scary short term, but oftentimes I think as much they can be an opportunity as a source of risk.
This might help me to understand it better. There was a big, news headline clickbait title today. It said $1 trillion in open interest on perps, and I had no idea how to interpret that. Can you tell us how to interpret that, Doug?
Yeah. Okay. So that's a great question, and I think that goes around now. Everyone's talking about perps dexis and like how do you evaluate them, and do you use volume, do you use open interest, do you use other things, and like anything, like metrics that are start being incentivized, start being manipulated. So right, like a key thing to remember about like perps are right. Every long has a short. So if you're long 1,000 or $1,000,000 of Bitcoin, someone else or someone else has to be short. So there is no at the end of the day, it's a zero sum game. At least the perp side. Now people can be and often do you can be long perps, short spot, or long spot, short perps. And often right, like that's a common strategy, especially when like these funding rates get dislocated. But right, like open interest really just reflects from the market how much total positions are. If we add up everyone in the market, how much total dollars are open at any given time. So I think like oftentimes people try to interpret that, is this bullish, is this bearish? Well, like on the face of it, like, there's $1 trillion long, and there's also $1 trillion short. So like it should be neutral. Where it does become interesting is there one side of that that's kind of has higher conviction than the other side, or is there one side that's kind of more levered and might be liquidated more? And those can be imbalanced. But I think just off of the face of it, you have to like ask yourself, okay, this is open interest can be as bullish as is bearish, and you have to ask yourself like, what does this mean? Do I think this is too high and this is going to like come down? Do I think like this is a sign that people are putting on, like, why are people short? Who are the people who are short? Who are the people who are long? Like, what are their motivations? And then you can think from a trading perspective, if something else changes, what is that likely to do? And like open interest is kind of like a amplifier on that.
Yeah, I hate to stay in the perps topic because Fogo is much more than that, but it's such a hot topic right now. Like we know Jupe had perps for a while, but what's your thought on this? Is it because there's airdrops? Is it because of the flywheel? And when does that kind of break?
Yeah, I mean, look, like the airdrops and the incentives, you can't discount them, right? Like Hyperliquid airdrop was kind of generational, and so if you miss that, you're gonna chase it. Is the reality, and like Aster kind of broke through, and the Aster token for whatever reason is doing very very well. So right, like people want to make money, and I think right perps are mostly zero sum, but once you throw incentives on top, they're not necessarily zero sum anymore, at least in the short term. So I think like the airdrops are definitely a big part of it. It goes back like in crypto, like there are really only, I don't want to say only, but like there are only a few business models that are like consistently profitable cycle over cycle. And one of those are exchanges and trading. And most of that is about leverage trading, kind of like what I said earlier, is perps are much better business model than spot. So to the extent that these are finally moving into like DEX space, right? Like whoever ends up winning like this battle for perps DEX, this is a very big like pot of gold at the end. So it's worth it kind of to check out kind of long tail, because right in 12 months or whatever, like there's probably only going to be a few winners. So yeah, I think like it's just a huge category. It's validated. It's obviously a very profitable business model, and users kind of naturally, I think, are, and the products are getting better, right? Like I think it's getting more comparable. Bybit, Binance, and like it's just an easier way to find a perps dex and trade what you want. So yeah, I just combination of things, and obviously whatever crypto's reflexive, so whatever people see on CT, they're gonna kind of ape into.
I haven't been liquidated often, but I did catch a liquidation about a week ago. That's why I'm like so hung up on talking about this. Because I was trying to time the bottom. I was kind of following our guy Tom Lee. I was liking what he was saying. The market was kind of chopping. I did kind of put a little. It was a small play, but a little over leverage there. But I want to talk a little bit about about liquidations in my personal feeling are, even though you talked about this earlier about the underlying asset, nothing changes. So liquidations you could really categorizing are somewhat healthy. Kind of get washes out, the crap a little bit, makes everybody a little bit stronger, and we make a next move up. Could you talk about your thesis there?
Yeah, I think that's definitely it's definitely right. This is not a crypto story. This is a 1,000-year-old story, maybe even longer, right? Like ever since people started trading, I don't know, whatever they traded the first time, right? People have gotten over levered, over euphoric, kind of allocated more than they should. It's easy when the chart's going up to throw everything at it. There's kind of this famous result in mathematics. It's originally from horse racing. It's called Kelly bet sizing, and it's basically right like how much of your portfolio you should put into something is what your edge is, how confident you are, divided by your odds, which is like how volatile is the thing. And kind of the story that, long story short, the story there is if you keep betting the farm, eventually you're going to lose the farm. So I think like when everything's going up, it's easy for people to forget that. There's like just human psychology. Crypto, I think, just magnifies that times 1,000 because these markets move so fast. So yeah, definitely. When people are over levered, I think deflating some of that is gets makes the market healthier, but certainly not fun if you're the person being liquidated. But yeah, I think it's always useful to kind of keep in mind, maybe how much do these assets move? Like how long am I going to hold this thing for? Like, is my thesis an
Hmm.
hour, a day, a week, a month, like whatever? Like what's my thesis of like how long I'm going to hold this for? And maybe just as easy as let me look at a chart. Like if I'm going to hold this for a week, let me look at, I don't know, 3 weeks on the chart and see how much does this thing move, and whatever the coin it is, and maybe don't lever more than that. And that sounds dumb, but at the end of the day, like a lot of the most like sophisticated quant funds don't really do stuff much more complicated than that.
Well, something that's, I wouldn't say taking the volume or liquidity away from perps, but like you mentioned, anything hot on CT, people are excited about, and you just described me, unfortunately. Uh, they said that, one of the top money makers is what you mentioned, exchanges, perps, but a lot of founders are talking about prediction markets now. Is that something that, is here to stay? There's huge amounts of volume that we can see, on a daily basis. The poly market, we see Kalshi potentially getting in. What's your thoughts there?
Yeah, I mean it's really interesting. I don't have a strong. It's interesting. It's like, what are I was talking about this with a couple of people yesterday. It's like, what are like the strong categories of prediction markets? So obviously, like sports betting is popular, like outside prediction market context, and maybe the prediction markets can kind of eat into that. Definitely, FanDuel or the sports books do a lot of I'm gonna say shady stuff, right? But like they're a lot more extractive than like you could be in like a DeFi context. Right there, I think people want to bet on like elections, maybe like global news events. But I see like one of the big challenges for prediction markets is like how do you keep people like interested in like betting on like all of these things? Like a lot of times, if you look at like poly market, the liquidity on like longer tail markets isn't super deep. So I don't like. I think they're really interesting. It is. Definitely not as vindicated as the other stuff, but yeah, I mean, like I do think right certain categories people are gonna like they're going to be with us for a while. Definitely every election for the rest of our lives, people will be talking about, I don't know if it's poly market, whatever the biggest prediction market, here are the odds, here, whatever. Yeah, we've thought a lot about it at like Fogo and like building out this market microstructure. And like a lot of it could be used for prediction markets. But yeah, it's interesting. I don't have a super strong view about like how big they'll be. And I don't think anyone really could tell you for sure yet.
Yeah, prediction markets are super unique in my opinion. I've gone down the rabbit hole for a very long time. I've followed it a lot during the election, kind of dabbled with my own predictions, but just really we were utilizing it as a news source at the end of the day. We had like the New York Times saying like Trump is leading Harris by this much, and they were calling out on Polymarket is where they got their stats. And I think it's because people could say whatever they want on mainstream media, but a lot of people put their money where their mouth is, and that's what's really unique. And I do agree with you. You kind of need a catalyst or something to. I mean, sports will always have its place, but FanDuel and DraftKings definitely has that cornered. But there's this other world here where I think if DraftKings is only legal in 26 states. So there's all these other states out there that can't utilize sports betting if they wanted to, and that's good. Probably that's going to get sticky in my opinion. I wouldn't be surprised to hear Polymarket or Kalshi, kind of gets their hand slapped by state regulators that they can only have predictions in those 26, and that's probably a battle that's going on every single day. But as of right now, Kalshi's opened in 50 states. I was actually just on a golf trip this past weekend with buddies, and they don't know anything about crypto other than like they ask me about Bitcoin here and there and then tell me it's like fool's gold. And I'm like, I don't know. I've been talking about for 10 years with you guys. It's been doing okay. It's been doing okay. But they love to like sports bet. And we were in a state where sports betting wasn't legal. And I was like, oh, like, and the one guy was like, I know a bookie. I'm like, is that even a thing anymore? And I was like, and I'm trying to show them Kalshi.
Like
I was
Goodfellas are like, yeah, call up the mob guy, the local.
Yeah, I'm like, we're in the middle of Nebraska, guys. Like, what are we talking about? And I was like showing a few of the guys Kalshi, and they just didn't have a lot of interest. And that started to get my wheels turning a little bit. I was like, is this something that's going to stay? Is this just our crypto circles? But there are all these other events like the FOMC meeting. I was watching it live, and I had like some small wagers just for fun as I was like, was Powell going to say inflation over 40 times? Was he going to wear something other than a purple tie? It is fun, but I'm like personally still trying to grasp if these are here to stay, or do we need like elections to really just kind of keep them moving?
Yeah, maybe just change the constitution and elect the president every 6 months, just so our bags will pump. No, it's for sports specifically. What's actually really interesting. I've talked with a lot of people about this. Is like what's interesting. Like if you look at like DraftKings or like FanDuel's, like what a lot of their growth is from parlays, and like I don't think anyone has really figured out how to do parlays like fully. Or maybe you do like RFQ. Like people haven't really figured out how to do that in a DeFi context. And I think whoever kind of cracks that will end up making a lot of money.
Yeah, Kalshi actually just earlier this week, and I didn't dig that deep because I'm not that big into it, but they did release like some sort of like parlay mechanism. But the reason
did they?
Yeah, I didn't even click into it too much. I saw it on CT, so I'm not exactly sure how valid that is, but they're obviously trying to work on it, it sounds like, or they have some sort of offering. But that's unique because that's the gambler mindset of just the entire country. I feel like that people plow into these parlays because they want to turn $5 into $50, and that's why we see like that's why I don't think meme coins are going to go anywhere. I don't think perps are going to go anywhere. I don't think a lot of these areas of what like crypto drives a lot of interest is going to go, but I don't know. We're very cautious there as well. As much as like I kind of like to explore that area, I am. If you kind of watch our show, you would look at me and be like, this guy just loves like prediction markets and meme coins and all of these areas. But 97% of my portfolio is into like areas of interest where they're actually building something of real value, real interest, and I believe will change the world. And we could go on and on about podcasts about those looks, but I don't know. I am just kind of rambling how fascinating I think just the mentality is and how that matches up to what we see every day in crypto, but it just moves lightning speed compared to traditional finance, which you obviously know a
Yeah, and
ton
it's
about.
super easy just to build. Like you got an idea in crypto, you build it, ship it, whatever. You got an idea in TradFi, a new instrument, new type of market. Well, it would be about 10 years of going through asking 100 people permission to do it.
Have you seen? I just had a question. I'm not sure if you've seen the Thaler talk about revolutionizing the credit market at all.
No, I haven't actually.
Okay. Well, I'm not smart enough to ask you about that specifically because I can't break it down. And I was wondering if you saw it, but just the whole thesis of
I
them utilizing DATs to, change the credit market, providing just better yield for retail users.
Yeah, the DAT stuff is pretty interesting. I think right, like that's another thing. Like, are DATs here to stay or not? It's obviously like the interesting thing about credit markets are they're very segmented. And so like for years, right, like if you're a credit manager, you're only able to invest in certain types of instruments, much more than like, right. Obviously, a hedge fund can do a ton of different stuff, maybe anything. An equity manager, there's a lot of ETFs, you can buy a lot of stuff. But like if you're a credit manager and you want like Bitcoin type exposure, or crypto exposure, things are pretty limited. So I'd have to kind of dig in more to what Sailor said, but I think like, one obvious innovation here is like Adapt can turn, crypto exposure into something that can go on a credit fund's balance sheet. And there's just a certain amount of credit funds are going to want crypto exposure. And so like a lot of things in finance, it's just about like kind of can I take X and someone can't touch X for whatever reason, institutional reason, repackage it in a way that they can. So.
Let's pivot back a little bit back to Fogo and let's talk about the current roadmap. Are there any features or expansions that are possibly planned next? And things that come to my mind are like multi-chain support, derivatives, margin products, things along those lines.
Yeah, so where we're at right now is our test net has been out for about 2 months. But our main net is very soon. We haven't released an official date yet, so I don't want to say it. Or be the first person to say it and have the team yell at me for saying it. But
I dare
users
you.
can expect.
I dare you. Clickbait,
Yeah, well,
I'm just
but yeah,
kidding.
so like, users can expect mainnet very soon. I think like we'll have a lot of like really strong trading products on there. Obviously, like perps we've talked about a lot, and we're going to make a big push into the perps space. We'll also have a couple of meme coin launch pads, at least a couple that are, I think, pretty strong. We'll have a lot of liquidity on day one. Like we've worked pretty hard to get that. So I think like users can expect like early on we'll have a lot of pretty strong liquidity. A lot of things to trade. It's a trading focused chain. So we'll have other stuff, but like it's if you're a trader, I think it will be a good chain to get. And it's interesting. We've seen a number of launches. I think Plasma did a good job with their launch day one. Everything was super smooth. Bridges, like all the applications worked, and so like I think we've had a lot of good examples of like strong launches that we've are working hard to live up to those standards.
I know it's super early on, and when you launch mainnet, these numbers are going to change drastically. But I'm just curious, what's kind of like your current user base or TVL?
Well, I mean, it's testnet, so
Yeah,
it's the
it's gonna be
numbers. The
capped.
numbers are very yeah. The numbers are very good, but it's testnet. So I don't know what like whatever number of wallets you want, but I wouldn't
True,
even
tough metric.
yeah yeah. I mean, everyone can say numbers for test site, but I always think that's a little bit lame because people click the faucet 10,000 times. But yeah, I mean, we have a
It's a
pretty
good call.
strong community. I think we've seen a lot of inbound interest. We have a lot of builders right now. I think like really the past couple months we've kind of hit an inflection point, getting a lot more mind share. People kind of talking about Fogo more. So it's kind of lame that we don't. I'm not going to give you a number, but
Nah.
I think I have pretty good momentum going into mainnet.
Yeah, I just kind of was curious off the top of my head. I get that with testnet, and you make a great point. Like how often people can click the faucet, or it's a completely different than what
Yeah,
testnet
I've
is to
seen.
what
Yeah, I've seen.
mainnet is.
We have 300. Like I think I've seen a chain claim 100 in the neighborhood of 100 million users on testnet. I don't even know if there are 100 million crypto users, but it
Yeah,
sounds great.
that's wrong. That's I will give me the prediction market yes or no, and I will slam the no on that 100 million. It's tough. It's tough with the test net, but excited for the main net for sure. And this is really up my alley. And a lot of people within our company, we love trading. You obviously seem like an extremely sharp individual, so it's something that I'm certainly gonna have it on my short list. What's the strategy overall? You have mainnet coming up soon. What's the strategy for onboarding new users, or maybe not even onboarding new users, maybe just educating the community of like liquidation risks and all of that?
Yeah, yeah. So I mean, I think right, like kind of the way we think about it is, Hyperliquid's been super successful, but if you really took like like a fair estimate of how many users they have, hundreds of thousands, which is very, very, very strong for like an on-chain product. But in that neighborhood versus like Binance will have hundreds of millions. Now, like Hyperliquid users are fantastic. They do a shit ton of volume. So you can't always forget who said this first. Maybe it was Hasib, but like with financial products, you can be very successful. Like Goldman Sachs doesn't have that many users, obviously a very valuable company. You can be very successful catering to a small number of users who do a lot, especially in finance where things are pretty fat tailed. But like the idea here is that like I think a lot of people are looking at perp stexes and thinking like, are these things like cannibalizing each other? And we really kind of are taking kind of the opposite of, well, I would say the opposite approach, but like we want to grow the pie, and like it's as like kind of generic as that sounds. I think right there's a lot of people who are trading crypto and are not doing much on chain, and we've really done a lot to kind of make the UX almost feel like you're not on chain. So like we have this thing called like Fogo Sessions, which is like kind of an alternative to a wallet where right now like it's gas free, it's instant confirmation, so like it feels like using a centralized exchange. You're not always clicking the wallet or checking gas. We've standardized that across the entire ecosystem, and like some people have done that for certain apps, but as far as I know, like I think we're at least one of the few chains who've done that across the entire ecosystem, really focused on the UX side. Ultimately I think we'll be able to do things with pass keys, with kind of making the UX a lot lower onboarding. So, a lot of our strategy is around like, can we get, the 100 million people who are in Binance and, never haven't or barely touch a chain at all to actually use us. And that's kind of what we're focused on, and kind of want to grow that pie.
Yeah, Doug, I love that answer because user interfaces are so important. I mean, Joe and I, we're kind of used to that clunkiness, I should say, but like we don't like it, but it's just kind of like what the world we've developed, and kind of just floating through your website. I checked out your testnet faucet. I can tell that there's been a lot of care taken with how you've built this out. And that's what makes so exciting to me because honestly, I've used Aster. I've used Hyperliquid. I mean, I could kind of list can go on, and there's like a tutorial you have to go through to like figure that stuff out. I couldn't even imagine trying to onboard somebody that wasn't like as savvy as we are onto some of those platforms. It's a pain in the ass.
And it's real money. It's not like, oh, let me learn a video game. It's like, oh shit, like I'm moving real money here. Like you can make a mistake.
Yeah, and we get it, like even the test transactions, but people don't understand that at the end of the day. It's clunky. The experience is not great to me. I've tried to help some people out, and I'm like, okay, what step are we on right now? And so love to hear that. And I think that'll actually propel you to the sky, and people once they kind of experience what you're building and the user interface is smooth, why would they want to leave? They're going to have this great experience, and it's going to be smooth. It's going to be easy, and just kind of just floating around for about a couple hours here on just what you've built on the website. I was like, this is smooth. I can already tell. So really love what you're building. Kind of the last question for me. What's the vision here for the next, let's say, like 1 to 3 years with Fogo? Where are we going?
Yeah, I think we really, like I said, it's a trading focused chain. We want to really be the center of trading. Of course, like we're gonna have other stuff to support that, but I think right, you see a lot of chains are, some there's other stuff in DeFi outside trading that's interesting, staking and lending and borrowing will have all that, but that's mostly focused in terms of can we build the best trading experience, and like ultimately that comes down to is somebody wants to trade crypto or even wants to trade TradFi assets, other assets over crypto rails. Like I want Fogo to be kind of the default that you go to. There's always going to be competition in crypto, and that's great. Kind of keeps us on our toes. But kind of the way I guess I'd say, if you're in the US, Coinbase is the default. If you're in Asia, Binance is the default. Like I would hope, in 3 years, Fogo was just the default for everybody.
Well, I'm gonna be contributing to this. I'll tell you that much.
Awesome. Thank you.
I'm gonna get myself going on the test net. I'm claiming my free test net tokens. I'm super impressed with you and just absolutely your vision, and we kind of align. And that's why I love these podcasts, because I learn about new products and we're able to educate our audience as much as possible. And we have an audience that's full of traders that love what you're building. And I'm just gonna harp again on the user experience. I think that's overlooked by a lot of, even though people say that they're trying to improve the user experience, they don't. It's kind of a carbon copy of exactly what we did before. So really excited with what you're building. I want to give you an opportunity to give a shout out so people can learn more about you, but really specifically learn and find more information about Fogo.
Yeah, so I would say first follow our Twitter account at FogoChain, and that's all one word. That's probably definitely the best way to keep up with us. From there we have a great kind of Discord community. Link from there, and keep up with our website fogo.io. But definitely we're very Twitter native. So that's, if you want to keep up with us, definitely give us a follow.
See, that's a true crypto guy in the house here. He's calling out. He's not. There was somebody, a guest I had on recently. We were talking about like exchanging info. He's like, "Don't email me. Don't even like." He's like, "I get too many emails." He's like, "Just hit me up on Telegram or Twitter." I was like,
Telegram, yeah, Telegram.
I like where you're going. But for the audience, I'm going to put all those links down below. I highly urge you, if you're a trader, if you're interested in learning more about Fogo, check out those links. Doug knows what he's talking about. Really excited that he was on the podcast. And once we launch mainnet, we should have you back on, kind of educating us how it's going.
Yeah, I would love to come back.
Awesome. Thanks, Doug.
Thanks. This was great.